sessions of the 2 days. We've been talking about deep tech. We've been talking about deep tech across verticals. But the key part of any sector, anything, is investments. And here we are talking about investing in deep tech. What is it? How is it different? If it is different at all, how does it work? We've got some key people going to be talking about it. People, request you to kindly take seats. Folks at the back, I will request Saxena of BEENEXT, who's the moderator of this session, invite him up on the stage so that he can invite his panelists on the stage. And here is handing it over to Chinmay. Do we have mics there? We don't have mics there? Okay. Handing it over to Chinmay and looking forward to an exciting hour. Over to Chinmay. Thanks.
Thank you so much. Can you guys hear me? Okay, great, great. Thank you so much, Upasana. I think this is one of the best opportunities that I could have imagined will happen at the Deeptech Ascent event in this DICON. And I'm just thrilled. The panel that we have is absolutely stellar for this conversation. So, let me start by inviting Anjali Bansal from Avaana Capital. Anjali, welcome. Vishesh Rajaram from Speciale Invest. And Vibhore from Capital to Be right in Delhi-NCR. Thank you. Awesome. So, I think the beauty of this panel is that, with Anjali, we have somebody who's kind of been on many sides of the world. She's got one of the best eyes on the policy that drives the future of India, especially on deep tech. And herself being an investor, she's kind of behind supporting so many deep tech founders. It's going to be an awesome conversation there. And Vishesh, I consider him as, the OG of deep tech investment in India. So we'll probably try to double click on, how you got into that, like way before deep tech was announced at Startup Mahakumbh by our honorable minister. And then Vibhore, first kudos to him for having been the CTO at Naukri for a really long time in its foundational journey to being one of the stars of the India startup ecosystem. And now, as capital to be investing in deep tech startups of some amazing quality. So, with that, I think what I'd love to do to kick this panel off, and the title is very interesting. It's called Patient Capital Bold Bets and the Future of Deep Tech Investing in India. And I was having a conversation with a founder day before yesterday and yesterday, and the founder twisted the topic. He says you have to be bold to be a deep tech investor and have patient capital. And I think that also kind of sets the stage for us to actually contextualize how different deep tech investing is compared to the rest of the stuff that we have seen. And in popular public narrative, obviously we hear a lot of things on television, everything else in media, a lot of great successes in consumer side of the story. But this is something which is truly nation building from an intellectual property perspective. So having said that, what I would love to do to kick this panel conversation off is to, for each of you to just spend maybe a couple of minutes to really talk about your core thesis of what it means for you to be involved with this. And then we will deep dive. So, Vishesh, over to you, yes.
Thanks for having me here, Chinmay and Ty, of course. So my name is Vishesh Rajaram. I'm a co-founder at a fund called Speciale Invest. We focus on science and technology, and we do this at 0 to 1. Or TRL 1, 2, 3 stage. I think philosophy has always been to work with founders who know things that most people don't know, that are leveraging that knowledge to build products and technologies that don't exist. And we've, over time, sort of managed to box this down into 4 big categories. We invest in energy, health, manufacturing, and space. Of course, AI cuts across everything today. That's a little bit about us. Thank you.
Thank you. Anjali?
Thank you, and great to be here. I think yesterday was such a terrific launch for the 100 Desi Deep Tech Baatcheet.
Yes.
So just picking up on that Baatcheet, at Avaana we invest also in about 4 categories with several horizontals. So our verticals are energy and the entire energy value chain, including manufacturing, generation. Obviously, we don't do utility scale renewable or CNI. So we are also early stage. We go pre-Series A, Series A. Our first check would be 1 to 5 million, and then we kind of double down on winners. So energy, supply chain, and mobility. So that this is the entire spectrum of industrial decarbonization, Industry 4.0, robotics, automation, manufacturing, advanced materials and biotech, and food and ag. So those are our 4 verticals. And in the horizontals, there is AI, there is precision engineering, there is manufacturing, robotics, as I mentioned earlier. Space for us, while we think about, we do invest in space and space tech and so on, those are technologies that are usually dual use, multi-purpose technologies. So propulsion systems, navigation systems, habitats that could be used either in space or terrestrially. So I'll pause
Great. Thank you so much. Vibhore?
Thank you, Chinmay. Glad to be here. Not much different to say here. I think deep tech is what it is. But I think the broad sweeps that we have are intelligence, health, and sustainability, and within that you have subsectors like potentially down the line sentient machines, advanced manufacturing. In health, we're looking at oncology, autoimmune disorders, brain. I'm pretty chuffed about the whole concept of the vagus nerve being a consequential thing, in human health, and then sustainability, right from materials to anything that sort of solves the agriculture problem.
Great, thank you so much. So, I think the way I would love to, kind of structure this conversation is because, I think demystifying deep tech can only happen when we start going into the details, right? And that's one of the most important things. It can't be a 30-second or a 10-minute pitch to kind of uncover what the future is going to be. And I think it's, if I can maybe start with you, Anjali, one of the taglines for your firm is returns-led and impact built in. So I would love for you to kind of, double-click on this a little bit from the lens of what kind of companies you end up evaluating, how you evaluate those founders from this particular lens, especially in deep tech. Because it's like returns-led, which is very clear, and then impact built in.
A great question, and I should have relied on you to ask difficult questions to start with. So, listen, there's our capital, I think for all of us it is true, our capital is commercial capital. So capital has a responsibility to generate a return. So our responsibility to our LPs and investors and for all fund managers is you need to generate a return. Whatever you have agreed with your LPs, that's the return. Return in our view is financial. So there's an economic return, there's a social return as well. And the baseline is do no harm. So we invest in areas which do no harm. But more importantly, over a period of time, the impact comes to at both a market as well as a society level. In a market like ours in India, we are a high growth economy. We've seen the growth, I think for many of us in the room, we have seen the growth to a 4 trillion economy, a rising middle income country. For us to now get to a 10 to 30 trillion economy, we will have a massive rising tide.
Right.
So anything we do in innovation, and what is deep tech? Deep tech fundamentally is innovation in whichever sector you choose to invest in, but it is innovation. Core innovation, which can be product-led, can be process-led, and in markets like ours, it can just be business model-led innovation also. That will lead to social outcomes around social equity, livelihood generation, income generation, and over time, creating more national resilience for the country. So we obviously invest aligned with the national agenda. The other piece, which is an important one, I think Honorable Minister mentioned it yesterday, and I just want to double click on that, is building global competitiveness. Today we are while we are deglobalizing, it looks like that a little bit, but actually for deep tech and core innovation, the competition is a global competition.
Absolutely.
It's not enough to be best in class in India, it has to be globally competitive. So I'll pause there and then we can continue.
Absolutely, that's very well said. Vishesh, again, very intrigued by your exponential over incremental stuff, because I think without bold ambition, you cannot kind of do some of these big bets, which are actually going to define, I always say this in many conversations that, the next 10 years are going to decide the next 150 years for India. So what we do in these next 10 years is so crucial at this pivotal moment. It's almost like magic needs to happen, right? So maybe put that in your perspective.
I think there are two sides to the coin. I'll talk about the brighter side first, which is, you're truly now in a geopolitical situation where you have to look for building certain very critical technologies on the inside. And once you have it, even then explore the potential of taking it outside to other global partners, right? And then this is going to need for you to step back and build technologies for the next 10, 20, 30 years, not for the next 1, 2, 3, 4 years. You're not going to be looking at building what's here and now. You're going to have to look for what's coming up next. And I think that's the philosophy, to always think exponential versus incremental. The other side of the coin is very inward, which is a fund manager view, right? We're a seed fund, you're coming in very early. You're never going to, I mean, and I know Anjali touched upon the fact that we're all raising commercial capital. Of course, we're measured on very interesting other metrics outside of returns. But the harsh truth is we're measured on returns first.
Yes.
And our philosophy has always been that you're a seed fund, all the risk is on the table. Just embrace it happily. Right? Which means end up taking things that are very exponential in nature, because linear risk isn't going to give you returns. It's at best going to give you linear returns. Right?
Right.
So that's the very pre-seed seed fund approach to saying that, you know, if you're going to embrace risk, you're going to look for something that's going to give you a non-linear return for the risk you're taking.
Right.
Or a fund manager view to it. But which is why I said the brighter side of the view is that you've got to build exponential tech for forward that's going to define where we place ourselves as a country.
Right. No, great. I'm going to double click on that a little later, but you know, Vibhore, yours is very interesting as well. It was science first and zero hype. And I looked at it from your portfolio lens as well. So some very interesting bets that, you know, if we were to look at maybe 2 or 3 years ago, you would have considered that to be a first reject at, you know, in your IC without probably next 5 minutes in conversation. So very interesting, curious to learn how that is shaping up.
No, I mean, it's shaping up all right, but I don't know it's as a mutant or what, but time will tell. I think there are two pieces to, you know, how we're looking at things. One is, you know, what we internally call is we look at unreasonable founders, right? They're unreasonable because, you know, they're talking about stuff that is science fiction. And you know, science fiction in India is a far cry because there are far more acute problems to be solved, if you really ask me, right? So one is that. And second thing is, you know, we meander in the territory between a research paper and an Excel sheet. And it's a long distance.
Yes.
Right? And so hopefully the idea is to sort of, you know, help the founders cover that distance, right? It is very easy to get excited by a technology or a science in question, right? But it is extremely hard, as Vishesh said, to put that lens and said, is it going to commercialize ever? Because unlike the consumer tech stories, there is no playbook here. It is binary all the way until it isn't, right? And you can't just put in more money and make things happen. They will happen when they happen, you know?
Yeah. You know, so, you know, I would probably want to kind of just start by extending that conversation a little bit further, right? So, you know, is India's deep tech future likely to be lab-driven or market-driven? Because this is another important question that kind of keeps popping up. You know, we're kind of in this shift, and, you know, this Tycoon itself is like evidence of how we are kind of shifting the narrative a little bit. You know, how do you balance that dynamic between market validation and some of that stuff that is going to be just driven by pure research excellence?
Glad you asked that question, but it's also pregnant with the answer. It's not binary, it's not either or, right? You have to have problem first approaches as well. And you have to have research-driven sort of ideas as well, right?
Right.
Because research will lead you to pathways which have not been thought of, which will short-circuit the conventional way of doing things. And yet you have to have ingenious founders who are solving problems for short to mid-term, if you may. In my view, the challenge also is there's no poster boy or girl story in deep tech yet. You know, and that will happen if you're solving some acute problems using science and tech, you know, and take the glory like people in e-commerce and the likes have done.
Right, right. If I can, you know, maybe bring you in, Anjali, at this point, you know, I think the best way to kind of also translate some of this into reality is actually stuff that you're driving with your portfolio actively, right? So I think what would be your patient capital and bold bet, for example, as one case study if you could pick between your portfolio that you could probably talk a little bit about?
If I may, I just want to pick up on the lab versus market.
Yeah.
I think you do need both. But the way to think about the capital stack, there is a different type of capital required for lab-led.
Right.
And a different type of capital required for market-led.
Right.
I think fundamentally, if it is a fund structure, commercial capital, and so on, while we may take very early stage, and Vishesh goes in particularly early, ultimately you do have to keep an eye on when is the market ready for adoption,
Right.
and when will it commercialize and scale. We can have a longish discussion on capital stack,
Yes.
but there is a need for developing in India. The ANRF and the RDI are a step in that direction, in the right direction, to have that full capital stack of really, really deeply patient, philanthropic, government, almost grant capital for lab-led, then incubation, acceleration capital, and then finally commercial capital for scaling. And this is still only equity. We haven't even talked about debt and credit and working capital,
That's
which
right.
is non-existent. So there is a lot of work to be done beyond the lab, beyond the science, into developing the capital stack and the market structures that will enable scaling. Because without scale, there is no impact, not financial, not otherwise.
Right.
Let me talk about a couple of companies as you asked.
Yeah. Yeah, please, sure.
So I think we Indians are very competitive. We're very good with math. And therefore, I think we always measure everything quickly. Right? There are enough times where people are measuring, oh, space tech grew X this year, Y next year. The whole sector is super early.
Right.
And my view is, and I largely agree with both, that you need both lab and market. But it's too early to measure anything. We've started to invest in deep tech for the last 5 years. You've got our neighbors and other people who are doing it over the last 50 years. Now, why do you want to measure the ROI so quickly? You have to go deeply invest in this, do a bit of both. I think give it a good 10-year run. Because if you're doing nation building, then we can't do it in a 2-year run, 3-year run.
Right.
We've got to give it a decadal view on it.
Right.
All of us, of course, the policy makers, everybody, the entrepreneurs. And I think we have to give ourselves the benefit of doubt that we're all smart individuals. We have to make returns. We have to commercialize. I mean, this old persona of there's a professor who's 60 years old and does not know to commercialize doesn't exist. I haven't seen that. They're all very savvy. They're all very smart.
Right.
I mean, of course, the execution is always very hard, and that's the binary part that he spoke of.
Correct.
I think it's early. If we truly want to do nation-building stuff, and if we're really talking about deep tech ascent, we have to give this time, and we have to over-invest on it on all possible sides to see which one really takes off.
Awesome, awesome. So, because we're all investors here sitting on the table, I think it kind of merits this question as well, right? Like, in terms of the fund's ability to raise funds from the right kind of LPs who understand this dynamic, who understand the long gestation period, are actually backing patient capital. What is the score that you give, if I can just maybe simplify it extremely, in terms of awareness in the Indian local LP ecosystem? The government's doing their job, right? Like this RDI fund and then the FF stuff that we talked about is pretty significant. I think that's going to kickstart. But are you also having to do a lot of hard work in educating some of our LPs to get involved with some of that long gestation period bets? Or is it like easy? I mean, anybody can take that. Yeah.
We'll let her go back to the previous question and then answer. She's fundraised as much, so I'm sure she can talk about
Yeah.
it.
Yes, yes. Oh, yeah. We missed the portfolio part. So let's park this question for now. Yeah, let's come back to the portfolio piece. Oh, okay. Let's finish this.
I think fundraising is never easier.
Yeah.
It's never easy for anybody. But I think the awareness levels are definitely getting better. There's still a dichotomy between saving the nation and making money. And somewhere that has to converge. And that goes back to the point Vibhore made, that you need some poster boys to show up.
Right.
But you waited 10 years for a poster boy to show up in e-commerce, so you have to give similar time at least for deep tech, right? And that will play itself out.
And you as a person, as an individual, as a fund manager, do expect the LPs to also develop the kind of muscle that is required to understand and evaluate deep tech investing separately? Or are these the same guys who are putting in money into a D2C brand and also a deep tech bet?
I think the short answer is no. I think the LPs are very savvy. They're very smart individuals that's managing capital. They're capital allocators.
Right.
If they understand too much of what I do, they don't need me.
Absolutely.
At least that's my view to it. Right?
And it's your job to kind of make that happen.
I think the average family office is allocating across funds, across stages, across sectors. So I'm not necessarily expecting them to sort of come in and get involved and save the next rocket company or the next quantum company.
Got it.
So I'm both optimistic. I'm very optimistic actually about the growth of the pace of development of capital, the sophistication of capital in our country. I think the institutions are getting there faster. Some of the larger family offices are also able to look across asset class. But for the most part, and remember, private wealth in India is very new.
Right.
It's barely 10 years old. And so there is a preponderance of the need for liquidity. So public markets have delivered fantastic returns. So in the face of public markets
Yep.
delivering both liquidity and fantastic returns, it's kind of hard to tell people wait 20 years. So the pressure on generating DPI is there. And it is real, both from institutions, because institutions are folks who are not decision makers. They are making decisions on behalf of their stakeholders. They are held accountable for, you know, your public market portfolio generated XYZ return, so where is your private market, so where is the DPI?
Right.
I think it is incumbent upon us to be very discerning about the kind of capital you take. Most funds today are 10+2 in India, which wasn't the case 10
Right.
years ago before the AIF regime.
Right.
So we are trending in the right direction. Is there a large amount of domestic capital available today for deep tech? There isn't. It's a learning journey. It's a mutual joint learning journey.
Right.
Our policy-led institutions, whether it is the new FFS that SIDBI is putting out, I hope SIDBI is putting out soon, that actually has a strongly focused agenda for deep tech.
Right.
I think some of the more sophisticated family offices are willing to take long-term bets.
Right.
The rest of the market will catch up.
Yeah, I think
Optimistic.
especially the heavy engineering-driven family offices have that DNA. So let's come back to the portfolio point, Anjali. You know, I think I'd love to for the audience to kind of hear a demystified answer to actual portfolio journey. So let's talk about that.
I'll pick two. One in energy. I'll take ampere hour.
Sure.
So folks who know energy know that, you know, India has a 500 gigawatt renewable target 2030. You know, whether it happens 2030 or not, 2032, it will happen at some point. It's a large number. Basically, it's a large number. It feeds into India's energy security, into our economic security as well, and direction of travel is very robust. For 100 of renewable generation, you need 30 of storage. So storage is required. We didn't, till ampere hour, we did not actually have a standalone private sector independent BESS company in India. So this is battery energy storage systems. They plug in with grid operators, with so transcos, discoms, as well as grid operators. There was a regulatory unlock that happened about 2 years ago. Till that time, storage was not recognized as a service. Storage and the release of energy was considered generation. So there was no tariff regime for it. There was no way to price it. And that, the technology development, so ampere hour will compete with any global company like a Envision or a Fluence. Fluence is a Siemens company. So they had the technology, they had built the solution, but we needed the regulatory unlock. That unlock happened and the market has taken off.
Right.
So patient tracking, understanding of domains. So we have to, you really need to understand all the domains that we invest in. And then being with them on that journey. And this is a company that is globally competitive and is already sort of stepping out of India.
So we'll probably be very, very self-reliant pretty soon.
Very soon.
On this stuff.
Very soon. The need for debt rather than equity.
Right.
I'll take another example if
Sure.
we have time.
Yes.
And that is in food and agriculture. And this is an example of really, really deep tech. It's a company called Iki Foods. They came out of IIT Bombay. They developed a patented polymer-based growing chamber system where they are able to grow vegetables in the desert of Rajasthan and Kota at 100 degrees, 50 degrees Celsius temperatures, 80% less water use, marginal electricity because there's no greenhouse, and they're able to grow vegetables at mandi prices.
Right.
So this is really the future of food production, and not just in India but anywhere in the world, because guess what? If you can grow vegetables in the heat and the dust and the arid environment of Rajasthan, then you can do it in the Middle East, and food security is an issue for all countries. So Iki Foods, again, you have to take some risk there. When we invested, they had about 1.5 acres under production. They were in the first generation of growing chamber.
Right.
Today they have 150 acres.
Right.
They're on the generation 3 of the growing chamber, and 100% developed in India. So for science fiction fans, and I am one, what Matt Damon was trying to do in The Martian, these guys have done at scale.
Yeah, okay. I'm more of a beam me up Scotty stuff. So, but I think it'll happen as well. Vishesh, we share a portfolio, Agnikul. A lot of people will start by saying SpaceX of India, XYZ of India, Rocket Lab of India. Maybe talk to us about that journey, because you were really, really early on Agnikul.
Yeah, sometimes, being patient is an unintended byproduct of being bold.
Yeah.
Agnikul is definitely, an example that makes us all look smart today. I think when we invested, there were two people, and they had this vision that said that if they could find a way to make rockets faster, then they could take satellites more quickly to space. And then they broke that down to saying that one way to make rockets faster is to modularize the rocket and 3D print the engine. And 3D printing rocket engines was unheard of. You could 3D print parts, but not the engine. And 3D printing rocket engine just didn't mean you could buy a 3D printer and print an engine. It meant you knew how to design a rocket that works. And I think that journey, as I said, being bold allows you to also be patient unintendedly. Yeah. So it's taken them a good 5-year period to get their first launch in May of last year. I think they've got another launch coming up early next year, which hopefully will get.
Should always add hopefully, by the way.
Yeah. Yeah. Hope is just a way of life.
Yes.
Yeah, which allows them to sort of get into commercialization mode. I think another example of being bold and unintentionally patient is also a company called Anubal Fusion. So of course the ultimate energy is sun, and byproduct, the closest to that is nuclear energy. And for the longest of time, nuclear energy is highly regulated for obvious reasons, because it was using fission, which required uranium, which has other use cases. There was some literature that always spoke about if you were to use powerful lasers on simple elements like hydrogen, boron, that could also lead to energy. That theoretical lasers never existed till 5 years ago. And that started to change the game. And you started to see about 20 plus companies coming up in other parts of the world, in Osaka, in Australia, and of course in the US and Europe. And then we came across a team that understood lasers enough that said they'll take a bold step forward to try and build nuclear fusion reactors in India.
Right.
It's still a very early journey. It's under a year of our investment, but I think if that plays out, that could have very meaningful impact on India and humanity.
Absolutely, absolutely. Great. Vibhore, very different examples, I'm supposing.
Yeah, no, absolutely. On just the fusion bit, I think another area that I'm really chuffed about, but nothing much is happening, is helium-3. Helium is in abundance in the planet, and helium-3 could be a potential source, but nothing has come out there yet, so I'm to look out there. But talking with portfolio companies, I think one I would like to talk about is Unbox Robotics, which was warehouse logistics back in the day. Two young boys trying to sort parcels in warehouses using swarm computing, right? They had very basic mule kind of prototypes, and we just loved the fact that they were building an operating system of sorts for robots to coordinate. And currently now, they're doing decent amount of revenue over the last 3 years. They've just jumped dramatically. And what I love the fact is that when you see the robots in action, they're synchronizing roughly about, in theory, if you make them run a stretch, 40 kilometers an hour is the speed that they can get to. And to be able to, crisscross each other on pathways like that, I couldn't imagine that. So one, from a commercialization standpoint, we were patient and it happened. So green shoots, but it tells you that, look, it's possible, right? A second company, and that's a space that's very close to me, is health, is a company called Avaana, right? They're using the body's innate immunity to fight cancer. And they were very early on, and now I think they've done some clinical trials in canines and felines, and they've seen that dogs have responded very well to therapy, and even chemo has been sort of complemented very well. And I think that's going to be a brilliant sort of an outcome, right? Similarly, quickly 2 or 3 brain companies, 2 young boys, they were working on EEG headsets, and it was basically a brain-computer interface, and they were young, and their use cases were, hey, can we use it for paraplegia, can we use it for gaming, and so on and so forth. And I was a little uncertain because, on one side you had people like Elon Musk talking about Neuralink and this like that, and so almost stupid to think that something can come out of India, but they were hell bent on doing this, and they were very passionate, and they were actually in the 3rd year of their engineering when we invested in them. They've come a long way. They've made an EEG machine which is, one-third the cost. They've now also, come at a point where the headset can be hopefully distilled into a coin-sized device. And I'm pretty excited about that.
No, great. This is very helpful. I think one of the things as deep tech investors also, we have to keep a really sharp eye on, scaling and growing the ecosystem, right? And maybe Vishesh, I'll start with you because, Chennai is what I call the deep tech capital of India, right? And one of the best case studies now talked about a lot in terms of what can happen when academia, industry, policy bodies, and ambitious founders come together, right? So can you reflect a little bit on that unique sauce that is playing out in Chennai and, how do we kind of replicate that around the country? Or is there a different model to scaling it outside of Chennai?
So I think the short answer is I don't think there's a different model. And you spoke about academia, you spoke about industry and policy. See, the industry and policy switches have a much faster turnaround. I mean, I could start a policy today, you could get it implemented in months, if not early years.
Right.
But the academia shift takes a good decade.
Absolutely.
Right? And this is something I learned most recently, that the average professor in an IIT Madras institute is not expected to teach for more than 3 hours a week.
Right.
Which means they are expected to be researching. I mean, assuming you're working a 50+ hour a week, the
Yes.
40+ hours is going into research.
Right.
And what's interesting was that this research then leads to more coursework. So if they were to stumble into, let's say, Zinc-Air battery as a concept,
Right.
they built a course on Zinc-Air battery, and you've got 200 students who get trained in that.
Yeah.
So what ends up happening is you're now discovering something that didn't exist. You're training a bunch of people on that subject matter and giving them some expertise,
Right.
which is possibly the best thing you can do to society, because that allows for entrepreneurs to come out and gain a knowledge that most people don't have, that allows them to go build something that the market needs and does not have. I think this is something IIT Madras has serendipitously done
Yes.
in the last 15 years.
Yeah.
Merged it with a research park, merged it with high quality industry and policy supporting. And that's the magic that's working there. And I think it's beginning to show up in other places. But, we're all used to comparing one over the other, but they're all living very different lives,
Right.
very different life cycles of their own.
That's right.
But I think they're all heading in the positive trajectory.
Right, right. Like if I can just add maybe, to kind of add a couple of details to this, in one of my most interesting conversations with Professor Satya Chakravarti at IIT Madras, who's also kind of famously known to back and be co-founder in about 5 deep tech companies. His interest in eVTOLs was because he came across a talk from a Stanford professor. And I think within a few minutes, he decided that he's going to create a course from scratch. And he did not know anything about it. He started framing that course, and the best way he said he could pursue that goal was to start teaching that course. And I think that freedom was just amazing for him to kind of witness. And the second piece that he said is all professors, and professors are the kind of small business entrepreneurs who are specially researching. Right? So for him to create this facility called the NCCRD, where a lot of our other deep tech startups have been, born, he had to raise funds within the university, go outside, explain, pitch to so many people to get that done. And I now see that phenomena translating into many other institutions in India. So it's not just the founders that you see at the end of the spectrum, but there are these academicians who are behaving as founders themselves to enable these ecosystems in these institutions. I think that's another unique insight that I gained after having a long conversation with him. So, switching gears, Anjali, again now, you did a wonderful opinion piece in Money Control some time back, and you said, money is the easy piece. So what's the hard piece?
Money genuinely is the easy piece. Today, the world is awash in liquidity. If you have a good idea, it will get funded. The harder pieces are building the ecosystem, whether it's policy, it's industry. So if I have a minute or so, let me take a step back.
Yeah.
We are now sitting in sort of the 3rd or 4th cycle of startup in India. Way back in 2000, when I came back to India, there was no venture. There was no startup. The world did not believe you could do venture or startup in India. There was IT services, and that was it. So we went through the first cycle of startups. Make My Trip, etc. happened at that time. NetMagic, iconic companies today. Then there was a view that India, internet, and so on. And look, internet adoption just took off in India. We now have the lowest cost digital data network in the world.
Yeah.
Digital infrastructure got built. So there was a confluence of entrepreneurship, capital, technology, and policy creating that shared digital, the DPI space, the UPI and so on top of which, so digital rails on which businesses could be built.
Right.
Second cycle, right? Third cycle was SaaS. Now, India cannot possibly do product in software. Guess what? SaaS capital, now SaaS going to AI. So I'm super optimistic. So far it has been, how can you, when we raised our fund, we were asked, can you actually do deep tech in India? Can India really do technology, core innovation? How will you ever make money? And I think the result speaks for itself. Yes, you can make money, and you must. So we are sitting here now. So capital will happen. What is required, much like we had the shared digital infrastructure, I think we need a similar shared physical infrastructure.
Absolutely.
We need a network, and not one or two. We need like 100 of these labs that will provide bioreactor capacity for biotech companies, so they don't have to ship samples overseas to get tested and so on and so forth. And we need these, like I said, not one or two, we need 100 of these.
Absolutely.
We need pilot scale manufacturing, 3D printing. The facility at IIT Madras, the research park, is phenomenal. We should have 20 of those across the country. Why 20? We should have 100 of those. So I think we have to scale up our ambition, create that physical infrastructure, which is hard for any one startup entrepreneur to do, or even 5. That is where policy and industry have to come together and create these. We have seen successes with MSME clusterization, with the setting up of SEZs in the last 30, 40 years in India. We have models that work. I think those models now need to be applied to deep tech.
Right. Makes sense.
And sorry, a couple more things on policy. I think both import and export. A lot of the machinery that is required is still not made in India, whether it is testing or manufacturing. So easing the import and making it faster, because market doesn't wait. If our startup innovation companies, and startup, I'm calling it an innovation company, is slower to market than its German or Chinese or Israeli competitor, they will lose the order.
Yeah.
So import rules for these, particularly when you create SEZ type structures, and export rules as well. I mean, yesterday Bakal, Shruti Kutmatviya was talking about that, the ability to export your samples. So I think some of the policy work, and again, today's situation, I think policy will be somewhat easier to solve on the intent side. If I had to index on one ask, it would be the shared physical infrastructure. And finally, our industry and our large corporates need to provide offtake. The best form of capital is revenue. So no free pilots, paid pilots.
Yes.
And taking the risk with our own domestic native technology. We are all willing to buy equipment from, and I'm not picking on any 1, 2, or 3 companies, whether it's a Siemens or a Honeywell or a GE. Why not give our own companies a chance? At least do a paid pilot.
Absolutely. No, I couldn't agree with you more. And then I think, in forums like this, yesterday we had this wonderful discussion organized by our friends at the Startup Policy Forum, where actually we heard such tremendous and deep feedback which talks about the roadblocks that each of these founders actually are facing from a regulatory perspective, from this export-import issue. So I don't think that is an issue where we should kind of pivot too much too soon on the self-reliance bit. And the policymakers need to be really very conscious about what can be brought into the country to make this journey to excellence faster. So I think that's something that we all can probably agree on. Yes, Vibhore.
Add to this, and belaboring the point that Anjali made, right? For example, early days of Naukri, the first platform that we ran was on 30 MB space on a server, right? And the platform was used to sort of sell to HR managers, and sales guys would take me to HR folks and they would say, what is an internet? Right? So I had to install the entire site on a laptop, for which I had to install Linux on a laptop because Linux was not available off the shelf.
Right.
Right? That was the complexity. And fast forward to a time where AWS has abstracted the complete hardware, right? To her point, therefore, there has to be an incentive for at least corporates, big corporates like those, to come and build that kind of infrastructure also. So you have a 500 sort of lab facilities across the country, and anybody is just hacking away to glory. The other point I want to make is that we need to relook at the way PhD is done. Right? I think PhD has to be outcome driven. not citation driven. And we teach entrepreneurship at MBA colleges. We should teach entrepreneurship as part of PhD. The reason to do PhD should be that you end up with solving a great problem by building a great company.
Yeah, I think it's great to do all of that stuff, but I think there are people who purely research on pure research outcomes.
I'm saying
Yeah,
just this
but,
way.
but I think, yeah, incentivize, maybe not now, but the cycle is such that, some of that that science actually translates into some application,
That's
maybe
what I'm
20
saying.
years down the road.
Look,
Right.
the hippie time was the best time. All the work being done today is due to the papers written in those times.
Right.
Right?
Yeah.
So there's enough papers written to do work.
That's right.
We're
yeah.
only building on that research.
Yeah.
Optional.
Optional course, opt-in course, absolutely a choice should be offered. Absolutely. Yeah. So we all believe that, the AI revolution happened in November of 22, but it actually began 50 years ago, right? Mathematically and from a science perspective. So let's, I think, understand that those are the kind of pieces that we will have to encourage our academia to kind of, really focus on. So, in the interest of time, I'm going to now switch gears to kind of go into a little bit of challenges, because nothing is without challenges. And we talked about the policy model and stuff like that. But if we were to look at, from an investor lens, how do and this could be like an open question, anybody can chime in, how can we evolve, either fund structures or, startup business models that kind of match the longer R&D and gestation cycles and, commercialization cycles in deep tech? Like, I think this is an open question that I constantly think about. Obviously you mentioned a little bit about it, but even if there are like ideas and thoughts that, I'd love to hear from the panel. Like, if one thing could be slightly different, it's a work in progress, I understand. You want to take a minute to think about it, that also works.
I don't think a minute's going to help. But
Yeah.
I think.
Sorry, deep tech is hard, so this panel has to be a little hard.
I think if you're going to go and tinker anything on
Yes.
the outside, which is the business model or the company, that's not very fair. I mean, they have to do what they have to do.
Yeah.
I mean, it will take a few years to do something on the brain, or
Right.
it will take 4-5 years to build a rocket, which is why it comes with deep gestation.
Right.
We have to look inward and saying, what is it that we can adjust ourselves
Right.
within the LP and GP community, and I think that's the case to make.
Right.
You're saying that if you truly want to do nation building, then let's get real about it. And this is what it's going to take.
Right.
I think Anjali mentioned 10+2 funds should be the new order. You can't be raising 7-year funds. This is not private equity. This is
Right.
very early stage science and tech.
Right.
And I think, I think I love what Vibhore said. It's going to be binary all the way through. You can't get impatient about it. It's
Yeah.
a choice you made going in.
Right.
I think just that nuance, I'm very inward looking. So it's a nuanced maturity I as a GP have to build this asset class out and build this as a product for LPs to subscribe. That's my problem to do.
Right. Right. Vibhore, you want to add something?
Yeah, no, I think, I agree with Vishesh, and the companies will do what they have to do. And look, the thing about, and I'm new to this space, the thing about venture capital is that you're doing majority of stuff on borrowed conviction, right? It's the conviction that rubs off from the founders.
Yes.
So you can't alter that.
Yeah.
You mustn't, right? The second thing is that I think, for example, I have the challenge all the time. There's so much happening. As early stage investors, should we support all of it? But then where's the growth capital? Right, so we have to keep some coppers for follow-on capital as well.
Right.
So do we do only X number of bets and
Right.
take them all the way till Series B or till commercialization is in sight?
Yeah.
Because that's when the big guns will fire,
Right.
so to speak.
Right.
So that's the conundrum, yeah.
Yeah, actually, in fact, that's kind of the bridge to, Anjali, what you've been saying, right? So, is there a, this whole model of, grants plus debt plus equity and then other mechanisms, like what do you see there? Like, is there some stuff that, can kick in to accelerate the ecosystem a little bit more? Because I think this speed to market is again dependent on this growth capital. Founders can't be raising growth capital for too long. Yes.
The dilution, I think we can correct for subsequently. But time once lost cannot be regained.
Exactly.
So I think anything that can be done by investors, and any one investor or three investors can only do so much.
Right.
So this is really about the ecosystem build that is required on capital. And early, very, very early, the TRL up to TRL3, TRL4 capital is different. TRL3, 4 to 6, 7 is different.
Right.
There's work happening. A coalition is coming together to create the Indian Translational Research sort of facility, ITRI.
Yeah.
It's a coalition of corporates, and hopefully government will participate as well.
Right.
So we need that full capital stack and patience levels of different orders.
Right.
But we also need, Vibhore, as you said, growth capital, which today is almost non-existent. There's a little bit of it, but not enough. It should happen faster.
Right.
Debt is non-existent, unsecured, non-collateralized, either working capital or capex. And deep tech requires capex.
Right.
Digital economy does not require capex, right?
Right.
Your capex is servers. Here it's actually machinery.
Absolutely.
So,
Yeah.
so that capex.
Yeah, interest rate of that debt.
Affordable
Yeah.
debt. So debt that is unsecured, non-collateralized for
Right.
working capital or
Right.
capex at affordable rates. And then anything that eases the
Yeah.
path of the founder. Remember, deep tech founders are also, they're more science-led. So if they have to deal with import, export, getting approvals, manufacturing, permitting, educating, hopefully we can help with the education, but the permitting approvals they have to do. So I think that has to be solved.
That has to be solved.
Then growth capital also.
I think the government initiative is like really great for the top of the funnel, but the growth capital is something that is probably going to come and bite us.
I mean, it's one of the things we look at, right? As soon as we say, okay, this is an investment we are likely to make, the next question is,
Next
how do we
round.
make sure who is going to invest in the next round? How
Yes.
much capital should we reserve? What are the milestones required? You have to start thinking right away.
The only example I can give is that there's many spark plugs. We need turbos.
No, well said, well said. So, in the interest of time, I want to definitely take some audience questions as well. But, while we're on this conversation on constraints and challenges, obviously there is talent drain that is also a very real challenge. And, I think we can be fairly honest in this room, any AI talent that walks up to discuss an option with me here is like comparing an option outside of this country to say, if I'm wanting to build something massively for myself, whether in a startup idea or whatever, I may decide to move, right? Do you consider that as a big issue for broader deep tech ecosystem? AI, I'm just taking as an example, but I know there are things that are firing, but do you think that is a challenge in the short run? Who wants to go with that? Yeah.
Talent will also always be an issue. Yeah, I think, and I go back to analogies in the day when we were doing software at InfoEdge, right? When mobile became hot, right? Mobile developers were expensive,
right?
And they were moving away to bigger companies, US and so on and so forth. When data science became hot, it happened, right? So I think it'll keep happening. The question is, are you quenching their thirst for outcomes? Economic, academic, that's the question, right? Why do most people who are doing astrophysics want to go to NASA?
Right.
Why?
Yeah.
Because that's where the cream is. You rub shoulders with people who challenge you, who question you, and of course there's funds, there's infra, economies, and so on and so forth.
Yeah.
Here it is a multiple choice question. You only pick one out of those 4 or 5.
True. Anjali? Yeah.
Listen, talent, as Vibhore said, is always a question. But what makes Silicon Valley Silicon Valley? It's not the zip code. It's not the buildings. It's actually the people and the shared history of building and failing and building again and having outcomes. I mean, there's a whole. We haven't even talked about what are outcomes. For fund managers, you have to generate an outcome.
Yes.
Where is the exit?
Yes.
So there's growth capital, there's exit. India is almost non-existent today on secondaries. Just starting, but we have to create that secondaries market.
Yeah.
For example, for most of the AIFs, they will have a couple of the big institutions as investors, SIDBI, SRI. The thought process around secondary. Can you do for DPI? Can you take liquidity earlier? Can you create a secondaries thing?
Yeah.
So I think some of that has to get sorted out. But for talent particularly, talent will come if, and in the current geopolitical context, when talent was used to all gravitate to Silicon Valley, now at least the Chinese talent is going back to China, right? Because
Right.
they know they have opportunity.
Right.
We have to create that environment here. That's on us.
So just another little exciting off side tangent, right? Do you expect that there will be a world where we are actually attracting global talent to come in India from a deep tech perspective? I hear this, Chinese talent, they did the 1,000 scientist program and called everyone back. We are calling all Indians who are working outside back. What about other experts? Because, if I want to work with the best rocket engineer and if that person comes from SpaceX, why not? What would make that story kick for us?
Talent is the most liquid of all capital.
Yeah.
It will always, as they say, water will find its level. Talent will come if the opportunity is the most attractive in the world. That's on us.
That's on us. That's on us. So I think it's a harder problem. So I think we are kind of co-creating the deep tech ecosystem so that we can accommodate some of those nice ambitious goals. Okay, so I'm going to open it up for audience questions at this point in the interest of time. Happy to take questions. Please stand up, maybe mention your name and ask the question to whoever you want to address it to.
Thank you for an insightful session. My name is Archit, and on the conversation about the talent, especially when we talk about bold bets like we're talking about, have you seen talent as a founder who has actually taken the business from 0 to 1, also becoming a bottleneck at some point because of the inability to transform and shift basis what the business is asking for? And have you tried anything that may make that leadership as a strongest asset, which eventually becomes the weakest in many ways? Have you seen anything on that aspect where founders are becoming a bottleneck in that shift of transition or inflection point?
Good question. Anybody?
Yeah, I think, at least the ones that we've invested in, they're all first-time entrepreneurs. And entrepreneurship is painful, hard, and very demanding, right? It's very different from when you're running a 20-member team to a 200-member team to a 2,000-member team. You've got to evolve and grow on your own. And I don't think there's a perfect solution. But what oftentimes we've tried to do is to make sure that there's a coach or there's somebody that sort of is able to sit them, dimensionalize where they need to get to and what it takes to get to. That, I think that's half the problem solved. The rest of it is really depending on capability, competency, and ability for someone to scale up. I think there are enough positive examples of this playing out.
Yeah. Can we have the next one? Anybody? Yeah. Can we get the mic to you? Yeah.
My question to Anjali, and I'm Abhilash, and a founder of Larkia, a health tech company, ex-GE. So my question is, we get a lot of requests of doing unpaid pilots from investors and of course from customers. There's a cost associated to it. How should we politely decline? And number two, when we know that there are other people who are competing, and how will the other person take it if we say we can't do free pilots anymore?
Listen, that's a really, really tough one. I don't know which investor is asking you to do a free pilot because it's not a good idea at all, but never mind. If there is one thing, not one thing, if this is probably one of the top 3 to 5 things I wish would change instantly. This pressure on startups to do free pilots for large corporates. And it's just the whole power equation is completely imbalanced there. With a large corporate balance sheet, small cost, and for the startup, this is a matter of survival. So something has to shift. If you are, I'm sorry, but there are no easy answers. I think you hit it on the head when you said politely decline while keeping the relationship. Not easy to do, and takes a lot of courage to look at a potential big customer who can pretty much create sort of your P&L and say, no, I will not do a free pilot. Very hard to do, but respect.
There's one more. I think we'll take maybe just a couple of more and then wrap up.
There's one gap that we often see when the academicians are working on something really cutting-edge next-gen technology, but they don't necessarily have all the ideas. They can generally tell you a laundry list of applications that it can go in. There are a dearth of application engineers who can foresee what the commercial impact of this research could be, and that is where the traditional entrepreneurship gyan will not help them basically, but what will help probably is training. And what I want to hear from you as a thing in the ecosystem where it can't happen in the academia and the industry doesn't have necessarily the latest and the greatest research happening, where do you see that application oriented or the entrepreneurial gene can be fanned further?
Yeah, Vibhore.
Look, what I mentioned, right? I mean, it's not a gene that can just come into the pool and add it on. I think the moment you see a problem and you think you have the solution, you have to build on the way, right? I think the biggest trait in a founder is the ability to mutate, right? Because a lot of times things change not just because that's how you design, but that's how the market reacts. That's how the users react, right? There's only two ways to go about it. One is enter a market, and second is to create the market. I don't think there's a third one.
Yeah. One last question.
Yeah, hi, good morning. My name is Vinay. I'm co-founder of Pramatra Space. My question to you, to anybody on the panel, is to get your, to hear your perspective on the RDI scheme. I think we heard some incredible insights from people in the government, Professor Abhay Karandikar yesterday. Do you think the VC ecosystem, the fund managers, are really ready to absorb the kind of funds that the government is going to be releasing and deploying it with a very different mindset? Because I feel as a founder, the government has done its job. Is the VC ecosystem ready to deploy it with a new mindset? Just wanted to hear your perspectives on this.
Yeah. Maybe Anjali, you can take this.
I think the VC ecosystem was ready yesterday. So I'm not worried about the readiness of the VC ecosystem. I think the founders are ready, the VCs are ready. This will be a very large capital unlock. And not to kind of keep beating this, but I think in addition to this, we need to create that shared infrastructure and the ecosystem that will lead to the final full unlock.
Yeah. Okay, one last question I'll allow from...
So this is not a question, it's just corollary to what he said. They also suggested like 3% debt fund. That was from Saurabh, our president, like emeritus president. So 3% debt fund without security as well as the other thing. 15 years. So that was also like said by Saurabh Srivastava.
Right.
So
no, I think it's a good idea.
Yeah.
All of us would not say no to that.
That's the comment.
Yeah, thank you so much. So, I think what we'll do is we'll wrap up this discussion. As you saw and heard, like from rockets to brain tech to battery storage, I think India's next decade is unfolding. And what it's going to take is, precision, practice, patience, and I think partnership, which we all agree across the ecosystem to make that happen. So with that, let's close this panel, and with a huge round of applause for our panelists, Anjali, Vishesh, Vibhore, thank you so much for joining us today on this wonderful discussion. Thank you.
And thank you to our brilliant moderators.